morning, dear students. So, in yesterday's class, we studied about the basics of accounting, isn't it? We studied about the meaning of the accounting, definition of the accounting, and other features, advantages, limitations of the accounting. So, in this class, we study about the classification or types of accounts. So, classifications. We have classifications in different manners. So, according to first way of classification, that means according to the accounting equation, we can classify the accounts into 5 categories. Okay, we can classify the accounts into 5 categories: asset account, expense account, liability account, capital accounts, and income accounts. So, this is the first type of classification. So, in the next manner or in next way, we can classify the accounts into 3 main categories. That is real account, personal account, and nominal account. So, real account deals with the assets or properties of the business. So, real account deals with the assets or properties of the business. For example, machinery account, land and building account, cash account, etc. come under the real account. The next type is personal account. Okay, personal account means, as the name suggests, it deals with the persons or human beings. For examples, in business, persons relating to, that means debtors, creditors are examples of the personal account. So, personal account, we can categorize again we can categorize the personal account into 3. One is natural personal accounts, then artificial persons account, and the representative persons account. Okay, natural personal account, artificial personal account, and representative personal account. So, natural persons account deals with the natural person, that means human beings. For example, we have already said about the debtors and creditors. Then artificial person account deals with the artificial persons. That means, for example, firms account, companies accounts. These are the examples of the artificial persons. Okay, a company is an artificial judicial person created by the law. So these are such examples. The next one is representative personal account. So these are the accounts which represents a person indirectly. Okay, for example, outstanding expense account, prepaid income account. Okay, these are the examples of the representative personal account. Then come the third category, that is nominal account. So, in nominal account, it mainly deals with expense, income, revenue, and gains. Okay. So, nominal account deals with the expense, revenue, incomes, gains, loss, etc. So, for example, rent account, salaries account, etc. come under the nominal account. So, these are the main types of accounts. So next we can study about the rules of accounting. So, in order to study the rules of accounting, we must know the classification of accounts, as we have already studied. So, while telling the rules of accounting, the rules of accounting can be viewed in 2 approaches. Okay, one is English approach and other one is American approach. So, English approach is the traditional approach that is followed by the olden days itself. Okay. So, first we can study about the English approach. So, under English approach, we take the second classification, that means real account, personal account, and nominal account. First, we can study about the rule of the real account. Okay. So, real account. In case of real account, the rule is that debit what comes in and credit what goes out. Okay, debit what comes in and credit what goes out. So, we have already said that real account deals with the assets or properties of the business. So when an asset is coming into our business, we will debit it. When an asset is going out from our business, we will credit it. For example, we can take an example as purchase of machinery. Okay, purchase of machinery for rupees 1 lakh. So here machinery is the asset which is coming into our business. Okay, so the machinery will get a debit. While purchasing machinery, we will pay cash to the seller, isn't it? Yes. So our cash is also an asset which is going out of the business. So cash will be get credited. So the overall journal entry will be machinery account debited to cash account. So this is the main example. Okay, so the main rule of the real account is debit what comes in and credit what goes out. So after the real account, it comes the personal account. Okay, so personal account mainly deals with the human beings. So the rule of the personal account is that debit the receiver and credit the giver. Okay, we will debit the receiver and credit the giver. So the next account is the nominal account. Okay, as we have already said that nominal account deals with the expense, income, etc. So the rule of the nominal account is that debit all expenses and losses and credit all incomes and gains. So we will debit all expenses and losses and we will credit all incomes and gains. So these are the main rules of accounting. These rules are also known as golden rules of accounting. These rules are also known as golden rules of accounting. So this is first type of approach, that is English approach. Okay, then we can understand about the second classification, that means American approach, or second approach, that is American approach. In American approach, we classify the accounts on the basis of the accounting equation, that is into 5 categories: asset, expense, liability, capital and income. So the rules is here that asset and expense increases, then it will be debited. So when an asset and expense is increases, then it will be debited, and if it is decreases, then it will be credited. Okay, so the same rule is for asset and expense. When an asset increases, it will be debited, and when an asset decreases, it will be credited. Same in case of expense. When an expense increases, it will be debited. When an expense decreases, it will be credited. So the next one is liability, capital and income accounts. So these 3 accounts has the same rule. So when liability, capital, income decreases, it will be debited, and increases, it will be credited. Okay, so that is the opposite rule of the asset and expense. So when an asset increases, it will be debited, but in case of liability, capital and income, it will be we will debit only when it decreases. We will credit when it increases. Okay, so that is the second type of approach. Okay, the American approach. So students must understand it clearly that when an asset and expense increases, it will be debited, and when an asset and expense decreases, it will be credited. So when liability, capital, income decreases, it will be debited. When liability, capital, income increases, it will be credited. Okay, so these are the main rules. So you must study whichever is easy for you. So in today's class, we discussed about the rules of the account and classifications of the account. So thank you.